Okay, good afternoon, everybody. This is Dennis Wilborn, the Active Trend Trader. I want to welcome everybody to today's session of how to make money trading stocks and options, plus some trading tips. We were just having a little bit of a discussion between the three panelists, and we were chatting about what the market's doing. It's kind of acting kind of crazy, kind of acting kind of weak. And so therefore, when that's happening, one, part of the, one is have a plan to basically start, trade small or not at all. Cash is a position, and it's okay to be in cash while we're waiting for the dust to settle with the market. What's hammering on the market? Will inflation kill the economy and your trades? And again, as I said, what's your plan? Both, Steve and Neil, myself, we've been through this kind of market several, many times before when they've happened. And Anil and Steve, what's your suggestion to everybody when the market starts acting wonky like it is right now?
Well, I think if it hasn't rolled over, I think you tighten your stops. You get out, get a little aggressive in exiting should your stops get hit.
Yeah.
Just business as normal. Just I think the only issue is to be a little careful with initiating new trades. You may want to hold off on that.
And so, yeah,
I think I got the same points here. Not new, and if I start a new trade, it has to be fundamentally very, very strong stock and right setup.
That's correct. Yeah, I agree.
Yeah, I agree. And after we do our review today, I've got 4 points that I'll share with everybody at the end of the, towards the end of the session on what you can do when the market's behaving like this also. So I've got 4 points I want to share with you. So let's go ahead and jump into what's going on. If you want to maximize and maximize profits, minimize losses, one Active Trend Trading was designed for you. A clear and simple way to, one, show you what to buy, top growth stocks and ETFs, when and where to buy it, when and where to sell it, and what to expect. Excuse me. Here's what we plan for today, which is basically take a real quick look at the market index review, stock picks for the week, and then some stock checkups if we have time to do that, and some setups. Those of you who have been asking me about the part 2 of our interview with Eric Gallup, our 100% man from Master Active Trend Trader. That will be posted this weekend. I was trying to get that up yesterday, and for whatever reason, my editing software just was giving me fits and wouldn't allow me to save it the way I needed to save it to put it on YouTube. So that will be up over this weekend time period. Where are we sitting? Now, always a reminder that the materials we do present are for trading purposes. Traders should always paper trade any new method prior to the risk of their own risk of their own personal capital. Here's where we're sitting at the end of June. July is kind of going dead, it's just basically going dead straight across right now. We were up for the first week, down for the second week. The meat grinder of 2021 kind of continues. I dropped about 2% from where I was last week. But the index have also come down a little bit also. Our accelerated compounding will take us, active trend trading wise, over what the markets, the indexes are doing. And by the end of the year. So my target is still 40+% for the year with a 60 to 65% win-loss ratio. Let's see those. So let's go ahead and jump into the session on the individual indexes. Here's what I'm seeing is we are experiencing a fairly, I will say a fairly, at least an initial potential significant shift in momentum. We have not seen it fully in the price action on the indexes yet. However, what we're seeing is the momentum indicators are starting to shift down. TSI on the daily chart, market forecast on the daily chart. I pay attention to the longer term ones on market forecast. MACD looks like it wants to cross to the downside. Now, as we see in the past, because take a look at what has transpired in the past is when MACD and when the other momentum indicators would cross over, what happened? Well, we just got a nice little pullback last time to the 50-day moving average, but we went sideways. This piece in here that we're going sideways, that is a meat grinder. In other words, if you try to trade the breakout, you get slammed because price actions run up to a certain level of resistance and then reject and fail, drop back down, hit your stop loss, and you wind up getting tagged for small little marks at best, small little paper cuts, and it's the death of a thousand paper cuts. On the weekly chart, we want to be aware of what's going on there. When the weekly turns over, as it appears to be, what are we getting? We are getting a price action was making a new high. Market forecast, the TSI, showing us that it was negative divergence. If we get across to the downside, expect us to move back to where? Well, it's respected this 20-week moving average, which is approximately the 100-day moving average on the last pullbacks. It pulled back 1, 2, 3 weeks here, 1, 2 weeks here, 1, 2 weeks here. And so it tends to be kind of short and shallow on its pullback. What'll be interesting is what tricks will the Fed pull out of its hat to help with the potential inflation issues. We all know that we are facing an inflation, and at least IBD is claiming that, that it's inflation that is causing today's sell-off, as we see right here. Dow erases early gains as market reverses on inflation fears. And so that's one of the things that's going on. One of the other things while we're here, and I just want to show this to you really quick, is this is a beach umbrella. No, that's not what I want to show you. This little indicator here, it is a timing type of indicator. It is the percentage of stock above their 20-day moving average on the NYSE, which is not a non-weighted index, being more reflective of what's going on in the economy. As you can see, it is down below 30. 30 tends to be a line of demarcation when this indicator gets below 30. Oftentimes it leads to a reversal back up to the upside. The deeper it gets, if it gets down to 15 or even 5, that's even better, because it will show there's not many places for the market to go except for up from that point. So we are in a reversal zone. The other thing that this shows us is, as the market was making new highs here, 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 the market was making new highs. The percentage of stocks above their 20-day moving averages were not, which tells us that the indexes with the weighted averages, that being the S&P, that being the NASDAQ, they were being held up by those big name stocks, while the lesser, or the stocks with lesser weight, but the majority of those were under the 20-day moving average. That is a sign of under the hood of weakness, Now, how long will the weakness last? We don't know. Right now, as we've seen over the past, any type of a pullback has been of a short and shallow nature. And so we don't know. Basically, even now, I've got a shooting star here on a daily on the S&P. That is still in effect, and we're pushing down. Where am I expecting it to go? You know, maybe down to the 20 and see what happens there. Maybe down, I've got two levels of interest, the 20 and this uptrend line. Those break, my focus then shifts down to the 50-day moving average. Qs. Okay, the Qs are basically still maintaining this uptrend line. However, they may break that, but where's it likely to go? Again, 20-day moving average breaks the 20-day moving average. Where's it likely to go? Down to the 34. And as you can see, if you will look to your left, if it gets down to the 34, look to your left. What do you see? A level of last pass breakout level, where that's where we could find support. The other thing I want to be aware of as the market is weakening, where is a 10% correction? A 10% correction would be absolutely phenomenal right now, simply because it would reset a lot of things and give us some opportunities for some big gainers towards the end of the year. Where's a 10% correction? Well, it's right there. Does it coincide with a past level of support? Yes, it does. And so can you imagine what would happen if we did get a 10% correction? There would be people freaking out all over the place. But that's where we want to just keep our powder dry, because you get a 10% correction. A lot of time, a lot of the stronger growth stocks will then start moving a little bit ahead of that. And that's where you can jump onto some gains that are gains of a lifetime, if you will, or can set you up going forward. So that's what I'm looking at for the Qs. Again, that's a heck of a long drop. The other thing I want to be doing on this, let me get rid of that, is just also throw in a Fibonacci in your weekend review from that low there up to this past high here. Where is the 50% retracement? Which would, now, isn't that interesting? That's about 100% retracement there. The 50% will be right on top of the 50-day moving average. This fib box is an ideal place for a reversal. This is the 1/3 to 2/3 that Charles Dow recognized in price action back at the turn of the 19th century. And it continues to work the same, but we use Fibonacci's now to determine where those are at. So that's what we got going on the Qs. IWM is being taken to the woodshed again. However, it basically is holding up above, Thursday's spinning top doji, almost hammer-like candlestick. Buyers came in at this level, pushed it back up. So this gives us a clue that buyers came in, pushed it up. However, today we've got seller, it gapped up here. That was a gap up. So it's a gap and crap. And it's basically dropping back down to the 78% retracement. Breaks that, it's got a great chance of making it to 100%. What are those retracements based off of? Basically a symmetric move. That's from this high down to this low, back up to this high, and then the projection down being symmetric. That would be a 100% symmetric move, equaling that. Oftentimes what we're looking at when you're measuring, for symmetric moves is a reversal somewhere between the 786, the 100, or in extreme cases, the 1272. So we're approaching those ballparks. Right now, I am not a buyer of IWM or the Russell until it proves itself back up to the upside. Now, it may be setting up here for potential because it's starting to get down into some lower reversal zones, but at this time, it has not shown any momentum shifts, and therefore I'll stay the heck out of it. Keeping in the back of my mind, file this away. The IWM, the Russell, tends to perform better in the fourth quarter of the year than the other two indexes. oftentimes the Russell will get a 20+% move in the last quarter. And so we want to be aware of that to be able to trade the leveraged ETFs. So gentlemen, that's what I've got. I'm, like I said, I'm not ready to jump on it to the long side until I get a shift in momentum. Thoughts?
Pretty much agree. It's become squirrely in the last couple of weeks, 2 weeks or so, 3 weeks. I think just take your trades, manage them, and I'm careful about new trades right now. I don't like the look of the market. But other than that, I'm just managing the trades I have.
Yes,
See the same thing. I was talking to Dennis earlier. I keep on one screen all of Cathy Wood's ARC ETFs, and all of them are showing me a sell signal on my triple screen system, and that's a little unusual.
Yeah. The market is definitely showing some weakness. And so, okay, gentlemen, now we're gonna share with everybody 3 stocks that are at least on our radar for potential pickup, and we'll start with CRWD.
Okay, let's look at a weekly chart. I think get the perspective first.
Okay.
It's been on a nice trend. It's gone sideways for a while, and maybe in the last month and a half, it's been in a nice trend. We've made all-time highs, and we're pulling right back. Is this a weekly chart?
On the left-hand side, Steve.
I've got to change my viewpoint. Hang on. Okay, so recently broke to all-time highs, and we're pulling right back to that all-time high level. And we look like we're holding at that level.
Right.
And it's particularly clear on the daily chart. We're holding that area. And I like the action today. I don't think it's an entry today, but it's probably for me an entry on Monday. If we take out today's inside bar,
Okay.
it's occurring where the sell-off occurred. Today's high gets taken out on Monday, I'll be into this trade. But I'll also wait. I wouldn't put a limit order, given I'm squirrely or I'm uncertain about the markets. If I enter this trade, I'll be doing it near end of the day, and I'd be sure that the market has not rolled over further. If the market has rolled over and made lower lows, then I would probably not take this trade.
Okay. And your stop would be where?
Under yesterday's low.
Right there. Okay, great. Yeah, one of the things I'm just watching, this is for everybody, as you look at your charts over the weekend, folks, take a look and just see how things have done in the past when you would get these rollovers, and if you're using the TSI and the TSI crosses to the downside, what kind of price action resulted? And oftentimes you can expect an emulation or a mirroring of that kind of price action. As you see, that was a pretty significant rollover here. You got a really nice pullback, but it only pulled back on the weekly chart to the approximately 40-day moving average or 40-week moving average, which equates to approximately the 100-day moving average. That was that move right there. So great pick choice. Yeah, Steve. Yeah, I've been just having it handed to me with the learning of trying to be as patient as possible, waiting for that momentum shift.
Yeah.
So, and the next one is, I really like this stock also. No, I just don't know how to spell it. There we go. We have made good money on this stock in the past.
Yeah, I'm picking DocQ, and the stock actually showed up on my Delaware focus list a couple of weeks ago. So this is kind of a late buy now, but still it's within the IBD range if you're looking at the weekly chart. And comp rating is very high at 99, and
Yep. Yeah, great comp rating.
accumulation, distribution, up, down, volume ratio, everything looks good. So That's what I'm picking.
Yeah. And what
Looks
I'm
good.
doing, Anil, is I'm laying in here. When you have a big wick like we have over here on the left-hand side, let me blow that up a little bit. When you have a big wick like that, I will go ahead and identify from the wick down to the body, and that provides me a zone where I can expect support. And sure enough, we tested that earlier in the week, and it's bounced back out of that. So are you going to buy today, or what's the story?
Yeah, buy today and stop around 4%.
Okay, that works. That works. So, okay. Well, I searched. I mean, I searched through, and on my stocks list, Anil, I was getting a very similar type of indications that you were, saying that no, it is nothing was shaping up with a trade, with the exception of, and part of the requirements I require is that it has to have some good composite ratings on the IBD stock checkup, good, a good, it has to be vetted and pass the IBD test. And so on a lot of them, they have been weakening so much that they don't pass those tests anymore. So what I did was I went back to, well, what was my suggestion for last week? And it was RVLV. It too is holding up very nicely. It too has a good, it came back and retested this breakout area here earlier in the week. Last Friday, which would have been here, we were saying, hey, if it comes back to the 8-day moving average, go ahead and try to jump on. And so I would have no problem recognizing, and then our stop loss was slightly below this level here, didn't hit it. Now we're bouncing back up. TSI is at a support area where it oftentimes bounces. My concern in this particular trade, though, to be full disclosure, my concern on this particular trade is this, that my TSI on the weekly chart is rolling over. That too, my TSI on the weekly chart, or my momentum indicator, is negative divergence, as I've made new highs here. I'm not making a new high here. And so I think it's good to go to the upside, and it may in fact reverse and pull higher. But if I jump into a trade, and this is tradable as of today also, it would basically, if I close above the 20, it would be tradable today. If I do not, I will wait until next week to try to pick it up off the 34. I will modify and grab my trend line and pull it down to that new low. That becomes my new uptrend. And I kind of like that uptrend better in that it reduces the slope. And so anyway, so that's the one I'm looking at, gentlemen. And so Anil, Barry asked a question. You quite often seem to use a 4% stop loss when you purchase. How often do you reverse and stop out before substantially moving up? Thanks.
Not much, because I'm sticking to my system of triple screen. It must have given me a signal, and therefore I don't have the clear documentation on that, but generally speaking, it works out 4 to 5%. IBD says about 7%. And I've done that also. But in a market like this, I like to stay tight. And if I get stopped out, so be it.
Yeah.
If I can add something there, I pretty much agree with Anil. I think for the most part, my stops don't get hit. I usually exit before stops ever get close to getting hit. Based on price action, either getting to a target or an area that I'm targeting, or giving me a reversal signal, which is a closing below the 80 MA. I usually exit for those reasons. It's very seldom that I get stopped out, although it happens occasionally.
Excellent. Yeah. And with mine, I use somewhere between a 3.5 to 5% stop loss, and which works out, which works out fine in a market like we're having right now. Though it is very whippy, and it will tend to get, stopped out more so. Now, if we're trending strong to the upside, I would say my stop out rate is probably maybe, well, I know what a stop out rate is. I hit typically 65% win loss ratio. And so, which that's excellent and a good for a trend trading or trend following system. When it gets whippy like it is right now, my percentage drops down to about 60%, but it's still above the level that Thomas Bukowski talks about, is that if your win-loss ratio is 60 or better, it proves that the system has an edge. But if it drops down below 60, like 55% or something like that, then it basically, your system is based on more or less just chance, flip of a coin. So kind of an interesting analogy there. So, okay, my friends, I think that basically closes out for today. I'll go, Steve and Anil, thank you so much. Let me get rid of that picture. And so here are the 4 concepts to keep in mind as we, so 1, when we're having the kind of market that we're having now, wait until the end of day. That means the last hour of the day to place any trades, or wait till totally after hours where everything is set in place. The reason why, as we saw this morning, we get a gap up, a gap in crap by some of the indexes. And so if you're buying that, what appears to be a breakout, you set yourself up to lose money almost off the get-go. 2, identify strong levels of both horizontal support and resistance, and try to trade off of those support and resistance levels. 1, wait for your momentum. 3 is wait for your momentum shifts to the upside before you before you start taking long trades again. And if you can't do that, like if you're kind of like trading midstream, if you will, where you're getting a smaller momentum shift, trade smaller. In other words, break it down to, instead of taking a half a position or a full position, take a quarter of position or a third of position. So like I said, trade small or not at all. And the best thing to do, number 5, is rather than trading in the market, go over and utilize the on-demand feature of the Thinkorswim platform and practice your system. Practice trading your system. That way you get enough trades under your belt so that, and it helps you with pattern recognition. It helps you also, teaches your patience, because you'll know, your gut just kind of tells you, I know I don't have the right pattern, so I'm not going to trade. So those are the 5 things to do when the market is acting wonky like it is today. So, hey, join us on the Autopilot Trading Combo. It's a great way to basically get specific trades. So just engage your Autopilot. Right now, we're $79.99 as normal a month. You can get just the top 5 stocks for $19.99 a month, but you'll save a whole bunch more on the combo. If you have any questions on that, you can find it at activetrendtrading.com/autopilot. So, gentlemen, that's all we have for today. I really want to say thank you so much. What percentage are you invested right now?
I'm fairly low. I'd say about 20 to 25%.
Okay, Anil?
I think I'm around maybe 30 or 35 somewhere.
Yeah. Okay. And I am I'm sitting at about 20% right now, just because, you know, what you like about a system, you want the system. The system's not going to it provides you insurance, but you want the system to start working you out of the market as the market weakens. And so, yeah, and so I'm really pleased that that's what's been happening. So everybody,
in my case, it's interesting. I was 100% invested last Friday.
yeah,
Now I'm down to 20%.
yeah. And so, and, you know, and that's something that takes a little bit of getting used to, you know, from a psychological standpoint, but it is doable. So, hey, keep growing the egg. We'll be back with the premium members at the final hour.
You got a very quick question.
Yes, sir.
What do you do, Dennis, for earnings season? If you have the positions, do you keep them on or you get out?
I have a very simple rule of thumb. If the position is not up at least 10%, I don't keep it on. I will sell it going into earnings.
Gotcha.
And if it is up, say 10 to 15%, I'll still look at taking some of the profits off the table. And the reason for that is on average, the stock will move after earnings around, you know, plus or minus 10%. And so if you're up 10%, normally, you know, the worst it's going to be is you're going to get close to a break even. And so that's okay. But, you know, if I've got a fairly sizable position on, I'll go ahead and take half the position off or even 2/3 of the position off. And that way, even if it, you know, hits, it drops 10% or even 15%, it's still going to be a profitable trade for me.
Gotcha. Thank you.
Yep, great question.
Yeah, and I do something similar. I generally exit 50% when I'm profitable.
Yep. So anyway, aloha, trade well and prosper. Start building now. It's never too late to start, you know, building wealth. And so until next time, if you haven't a subscriber to a YouTube channel, hit the subscribe button, hit the bell to be reminded when we do post new stuff. And that got to be very thankful. And we'll have some fun together. Please leave some comments. Let us know what kind of stocks you want us to be looking at. And just communicate. You just let me know because I really want to stay engaged with everybody who watches on YouTube. So Steve and Anil, thank you very much, gentlemen. We'll get ready to do it again next week. Good session today.
Sounds good.
Enjoyed it.
Okay. Aloha. God bless everybody.